Good afternoon, everybody. Welcome to the TraderMerlin Show for your 27th of July. An exciting day to be sure. Did not expect to see such a jubilant reaction to Fed Chairman Jerome Powell's comments about the market, about the economy, and of course, a 75 basis point increase. So we'll talk a lot about that today. And yes, I did have some fun with the graphic, as you will see. Unfortunately, my Photoshop skills suck, and I couldn't really Photoshop Jerome Powell's face in there over the emperor, but I kind of feel like this is where we're at. The Fed strikes back, just electrifying all the financial markets with, at one point up over 4% on the NASDAQ and many of the other indexes. So let's start at the bottom. We'll work our way up to the top performers, and then I'll jump into the economic data. I'll jump into the earnings data. And then I'll jump into the Fed. We have a ton to talk about. Yes, may the force be with you. If you were long, the force is with you today. I'm actually very fortunate. As I mentioned yesterday, I was like, I'm debating closing out my position. Thought I would do it yesterday. The way we reacted last night, I just decided, you know what, I'm closing out my long or my short position. So I closed out my puts. And just so you guys know, I bought right back in as we came back on the same supply level. So locked in a few $100s worth of profit, which was great. And I'm right back in the same position I started back on Thursday. So here we go again. Let's see if the economic data from Facebook and from Apple and Amazon guide this market higher over the next couple days. That is a good, catalyst potentially for optimism. Let's start off with the top 7, work our way up. I'm going to start things off at the bottom. We work our way up from the commodity space. Now, even most of the commodities were doing great today. My silver position, loving it. Had a nice pop up today for silver. Here you see gold up 0.93%. So still well below those trend lines. But one thing that's noteworthy here for anybody who is debating going long, and I'm pretty sure Brendan is here and he's going to love to go long gold, is one of the theories with trend lines, whether using a moving average or actually just physically drawing in the trend lines like we've done here, is it represents an average, a trend, and that is, a trajectory, a slope, if you will, of that line. And the further we get away from that, it becomes that rubber band analogy I like to use with you guys, where you pull it far enough away from your wrist, you start to get nervous that it's going to snap back. And we may be in one of those snapback modes. It still means that gold is trending down, but all of a sudden we might have some nice upside potential here for gold. We, of course, saw the dollar tank by 0.7% today, so that was also a nice catalyst for that. Let me just bring up SLV just so we can check out that one. We had a 0.93% move up in gold and a 2.56% move up in SLV today. I needed that in my portfolio. Now, moving to the indexes. Here we have Dow Jones Industrial Average, which really for the past 4 days kind of consolidated, just going sideways. Today looking great on a potential breakout here, although we didn't close at a high for the past week. Actually, 2 weeks. We did make a new high, but we closed just slightly below the previous high, which is back on July 22nd. Now, that said, this still looks great. It still looks bullish. It still looks like long is the way to go up until we get to about 32,900 on the Dow futures. That is where the next area of supply is. Now, what's interesting when we look at this one here, we have already some markets are already in that zone. Here's your Russell 2000, which is getting closer to that zone. Again, a little bit more positive than the Dow Jones Industrial Average. It was up 2.38% as of this exact second here. 1848 is where we're sitting at now. And you can see I still have some lines that go way back into April and May, which puts us right around 1940. That is your second major stop from right now, the first one being right around 1888. So we got a couple stopping points for the Russell 2000, but right now things looking rather bullish. S&P 500, right? This one, I've had this level mapped out right around 4117, which is where I think we will probably be headed. I have some stops in place here, so if I am wrong on my short positions, that's fine. I'll take a little bit of a loss and move on. But today's action, 2.47% move up in the S&P, looking great. That nice little breakout trade from that ascending triangle, and now it appears like we should be headed, all things coming out well tomorrow with Apple and Amazon, that this 4117 becomes a very logical target for the S&P. Now, crude oil, 3.44% move to the upside. It is right actually breaking that trend line as we speak. And of course, you torture a chart long enough to tell you anything you want to hear. We could argue that it goes to this point. There's your trend line there. Still looking bearish for the shorter term, for the intermediate term, but maybe building a base here right around that $96 mark. You can see we bottomed out close to $93.60. To me, that's that floor there where I'm kind of would get nervous if we broke it. But if we can get above this 100 mark, boy, all of a sudden you start to see some pretty tasty supply zones much higher here for crude oil. And I think the dollar selling off is going to have a big factor in the ascent of crude oil prices. Moving our way up to the top, NASDAQ, the one that I shorted today, as I mentioned, we had this ascending triangle. We had the breakout, we had a retest, and now it charged back up. Fortunately, I was lucky enough to get out of my position and then buy back in at a lower price here, so you can see the NQ came right back up that supply level. I pretty much got in and out at the exact, got back in at the exact same price that I entered last Thursday. So almost week over week, you see this nice little rip up here. Now, I am obviously a bit nervous. I mentioned that on the QQQ chart, I have that same zone. I'll extend it out here, right? Same basic setup. It's just we attacked it a second time. And for everybody here, I'm sure most people understand that the more times this thing hits that supply zone, the more likely it's going to break through it and rip to the upside. So stop loss for me on this position will be 315 and change, probably 315 and a quarter. If I get the Qs up there, I'll just dump it and lick my wounds and move on. But I'm okay going counter trend because I think right now what the Fed did is basically just slap you with a bunch of lightning going, be optimistic, the markets are great, everything is rosy, you're all going to get rich. That's kind of what I felt like Jerome Powell was saying today, especially at the press conference. Finally, and this is, when this kind of stuff happens for me with crypto, it's almost like I forget about the equity markets and futures and Forex and all that stuff because we had a huge move up in crypto today, which is great. Welcome. 9.16% move up in Bitcoin futures to 22,830. Man, we were drifting back down into that yellow box and just popped aggressively today. We're right back up at the upper end of that range and maybe some optimism there. Of course, there's a lot of information circling, or a lot of stuff circulating in the crypto space. Certainly the SEC going after Coinbase for unregistered securities regulation is a very bad thing. You also have the Treasury Department going after Kraken for going outside, what's the name of the term? Basically allowing cryptocurrency for sanctioned countries that shouldn't be allowed to trade. So all kinds of stuff going on there. Crypto haters can cry into their soy. Hey, you know what? Don't hate. Don't hate there, Brennan. Let crypto haters hate. Let people hate all they're going to hate, right? Let me hate Sam Seiden. Just let me do that. I'm allowed to do that. That's my prerogative. So if people want to hate, that's great. Let them hate. Okay, so a couple more things, but then we'll get into the Fed and Jerome Powell's evilness over there. Here's your dollar index. Now, I mentioned that it was down 0.67 or roughly 0.7% today. Basically just erased all of yesterday's gains in the dollar index. Now, I think that we're at a very interesting point because it feels like we're just starting to traverse sideways. Now, I could modify this box. Why don't we do that just for fun? We'll bring it up to right around there. That's on magnet. So if I put the yellow box, incorporate all the tails, which normally I don't do. I don't usually like incorporating all the tails. But that gives us an idea of where we're kind of stuck in this range-bound market for the dollar index. And if that keeps going sideways, I think that'll be okay for the equity markets. Obviously, if we start to see a breakout above and surging up, then I do believe that you'll see the equity markets take a bit of a hit, and that's kind of where my mind is at because look at the trend of the dollar, right? I'm still feeling the dollar is the strongest currency out there. If that keeps going, well, then the equity markets will suffer. But I can't hang my hat on that one, right? I just have to put a plan in place, entry, stop loss, price targets. If I'm wrong, I'm out. No worries. Move on to the next trade. Who cares? That's my attitude with this one. Let's see. Big Eb, welcome back. No, not driving anymore. Missed my traveling buddy. Let's see. Sold all Arizona property. So where are you moving, Big Eb? Don't tell me you're moving to Hawaii. I didn't know you were selling a bunch of property down in Arizona. Great time to be selling. Congrats on that. I signed documents last night, all but solidifying my sale of my property as well. So feels good to me. The other thing, just for note, I noticed in looking at some of the old shows that we did like 2 years ago, the video quality was so much better on me, and it just looks like crap in here, and I can't tell whether it's this camera or in fact I'm using a green screen. So I may actually take out the green screen and go back to just a normal wall. We'll have to see how that goes, but just letting you know, I'm aware of it. I look like crap. I mean, I look bad normally, but I look even worse with this. I look overly red, and it's all kind of blurry and fuzzy, so I'm going to try to fix that, guys, for you guys going from. Come to Jersey. No, Jersey is not my area. I remember I was at the airport in Newark, New Jersey, and we had some time. I was driving actually to Bethel to go watch some concerts, and man, that place, whew, out in Newark, the hood, man, crazy stuff out there. You want more fish posters? All right, maybe we'll do that. Shmev says it's called aging. I'm not aging, Shmev. I am eternally youthful. Okay, let me get into the fun stuff, which is Jerome Powell. Obviously he has a job to do, and I think that what he is going to say, as I theatrically did for you guys yesterday, was I need to, and I'm thinking this in Jerome Powell and the Fed's mind, we have to create an impression of stability. We have to create an impression of comfort, and we have to, at all costs, maintain the impression, or in many cases, the illusion, that we, the Fed, are completely on top of it, that this is within our grasp, and we are in charge of the situation, and the market is not in charge of us. That to me is what needs to be conveyed at every press conference. However, if you watched it today, you can kind of smell his bullshit going on with his presentation. I apologize. I'm going to try to curse less because I know we have some children who watch this program as well, so my bad. Some BS coming out of his mouth today. He cited all the things that I mentioned on yesterday's program. He talked about, the employment numbers were still looking pretty good. We are seeing a slowdown in growth. I love this is not a political thing. It's not a Trump or a Biden thing, but I love Biden's comments that, well, we're not going to get in a recession. We just have to change the measurement of recession. So you're not going to change my grade from a B to an A. You're just going to change the scale. So now my B just naturally becomes an A because it now falls within those parameters. Let's just change the whole scale down. So now D students can be A students. I love it. That makes a lot of sense. Let's change the way we record things. Therefore, all our historical measurements and all the historical data we've looked at that was based off this set of criteria is no longer valid and becomes useless. I just absolutely love it. I'm with you, Gallo. Abolish the Fed. It's ridiculous. However, what did he say? Obviously, he painted a pretty good picture for the economy. He really made it feel like things were in control. We have max employment, he was citing. Wages were up. The jobs were up. But there were... Shut up, Siri. There were a few things that I thought was interesting. It was consumer spending is declining. And he said that a few times. Production is declining, and then housing was declining. And that last one should be a pretty important piece. Let me show you the economic data for today, just so you guys can see the housing numbers. Remember, I've been mentioning that to me, I just feel like the housing market's rolling over and it's going to start to slide quickly. Look at the number of pending home sales. Now, it was positive the previous month by 0.4%, meaning we're getting a little bit more an increase in home sales. They expected it to contract to negative 1.1, meaning a slowdown in pending home sales. Well, we jumped at negative 8.6. So right now, if Big Ed was in the room, we would probably high-five each other because, hell yeah, we sold our houses right at the top. And a slide of 8.6% for pending home sales is pretty significant. Now, I'm really curious to see what will happen over the next few months and if this does continue. I think we would all agree, I've been saying this for months now, and this isn't a, hey, let me pat myself on the back, but when you have the 10-year jump from 0.4% to 3%, and that's the basis for 30-year fixed-rate mortgages, there's no way that somebody who was barely qualifying to get that 30-year fixed at, let's say, 3%, there's no way that person's qualifying at 6, right? If they're just barely making it by for a 3. So things starting to slow down on that housing front. And remember, for anybody who thinks I might be over-exaggerating or dramatizing it here, think of all of the jobs associated with housing. It's not just the house itself or the qualification in the lending process. It's all the materials for that house, especially with new home construction. So definitely probably the most important piece that came out today. I believe that this was just completely overshadowed by the Fed announcement, but this pending home sales number is ugly. And if the next one is just as bad, that will be the headline story next month. So remember this show. We are the 27th of July. When we get around the 27th of August and it comes out as another 8.6 or 10% contraction, then we are going to all of a sudden hear the mainstream media go, uh-oh, we have a problem. Housing cannot fall this fast. My property went down from 9K according to Zillow. Well, Naum, 9K? Who cares? Your house is worth 7.6 million, so you dropped 9,000. Big deal, buddy. I'm kidding. Naum, a lot of these commodities are down. So you have the components to make houses declining. Lumber and a lot of other building materials have been declining, but It's the rising, increasing rates and the uncertainty going forward. I actually was making a list that I wanted to compile for today's show. I apologize. I've been so busy. I didn't get to it. But I started making a list of all the companies that are doing layoffs. There's a lot of them. Now, you have things like Shopify. I think they said they're cutting 10% of their workforce. You have things like Coinbase, who's just slashing their jobs across the board. And a lot of other major companies, Tesla fired 200 people. Big deal. That's not that one. But I think you're starting to see the impacts of all those factors we talked about, which is going to be rising prices, spending less, and all of a sudden corporations are going to start to trim the fat. When the economy is robust, you can basically bring on as many people as you want. Great, because we're going to get huge. And then when things slow down a little bit, you analyze productivity and you go, no, you're not cutting it. You're not cutting it. You're not cutting it. We don't need you. We don't need you. Get out. And you streamline operations. When that happens, Jerome Powell cited spending as being an issue for our economic malaise that we're in. And if that does continue, if we see more layoffs, what's going to happen to spending? Going to keep on going down. Don't forget how the market didn't blink an eye at the housing. Didn't blink an eye at all. Everybody was just waiting for the FOMC announcement. That really is what it was. So let's go a little deeper into some of the things that were said. One of the ones that caught my attention at the press conference, and I forgot who asked it. It might have been Steve Leisman, but he was asking, what are you looking for with regards to inflation? And of course, he does the same thing. We're looking at getting 2%. We want to get down to 2%. He cited PCE price index, 6.3%. He cited CPI number, 9.1%. So clearly he's on top of it. But he said, and I quote, we're looking for compelling evidence of inflation decline. And I'm like, okay, so to me, compelling evidence would be that the CPI number goes from 9.1 down to 6, down to 5, down to 3, down to 2. What's your definition of compelling, right? That's a very open-ended word. Is compelling that I need to see commodity prices drop 90%? I mean, I'm just throwing stupid ideas out there, but at some point we need some clarity on what this is. And he actually said something in today's announcement which was very interesting. He was asked a question going forward about what their thoughts are on rates. And he says, we've been very transparent, but with regards to this, we're not going to be as transparent as we have been. And I was like, whoa, okay, so you're kind of pulling back here because you're front and center for the markets right now, and you are the one calling the shots. So now you can go back to the Volcker days and be secretive about your announcements? Okay, let's see what happens with that, Jerome. Didn't Powell practically say he was going after the housing market? No. I didn't hear that. I didn't hear anything saying he's going after the housing market. I just think that he mentioned that it was a concern that prices are slowing down. And I believe there was a statement saying that, look, when we raise these rates as much as we have, obviously that's going to impact the housing market. They knew that. Of course, if you know basic economics, you would know that as well. I mean, hell, I remember back when we went from 0.4 to 1.5, I was saying that's a big jump. Right? From 0.4%, for those who might be watching, let me just get you off my ugly red-faced mug that is ill-lit by this camera and go to the 10-year here. We have been selling off. We do have by the way, a head and shoulders pattern right now on that 10-year. But notice, where do we come from? Well, back here, just in August of 2020, we were at 0.5%. And then all of a sudden, we went way up. We actually went over 3.5%, and now we're kind of baselining at about 2 3/4. This pattern right here that you guys are seeing on this dollar or on the 10-year, keep an eye on that one. I still am a believer that you're going to see it move up just because of the trend. But if you're like me and you follow transitions in trend, you notice that we are starting to no longer make higher highs and we're coming back to these lows. So a true head and shoulders pattern. For those of you who might want me to draw it out here, I will draw it. It goes from there to there. Dab nabbit. Oh, I need to click which tool? Lock that one. There you go. From there to there, there to there. And for those listening to the podcast, I apologize. I keep saying from there to there. I'm really drawing out kind of the peaks and valleys of this head and shoulders pattern. So there's your head and shoulders pattern. And the belief would be that you're going to go, once it breaks, or if it breaks, you would go the distance from the top of the head to the baseline, which is right here. Now I'll move that over, and this should give us some idea as to where rates may go to. Why is this? There we go. So if we break down, wow, wouldn't that be interesting? Notice it looks like it wants to come right down to this trend line. Of course, it won't get there that quickly, right? It will probably traverse down slowly. But that is the forecast here. That would basically bring us down to about 2.1%, call it 2.25% maybe. But that's using the head and shoulders as a measuring object. So there we go. Pull back tomorrow in indices as any Fed day goes. You know, it's tough. It's tough to say that because you have other factors tomorrow which are massive, right? Obviously, yesterday we had Google and we had Microsoft report. Today, for some reason, they didn't show up my earnings calendar. We had Facebook report earnings, right? And they missed earnings and lowered their forecast. Let's take a look at Facebook here real quick. Obviously, that's a major one. Down about 2% right now. Even though it was up 6.5% today in the trading session, it's down 2% in the after hours. And here's your 15-minute chart so you can see that sell-off. That has had a little bit of an impact on the NASDAQ 100. So we can look at the NASDAQ futures here. Obviously, Facebook, a big component of that. Here is your NASDAQ, and you can see that really once that market closed, the earnings from Facebook pulled this thing down a little bit. Now, tomorrow, I'm sure you're all waiting with bated breath because we have Apple and we have Amazon tomorrow. I'm sure I'll revisit that one. But here's Apple's chart. It's been doing great. We've gone from about 129 bucks all the way up to 156 in about a month. That's a pretty darn good run. And you also have Amazon, which I'm sure Larry is chomping at the bit for because he seems to think it's very undervalued. He's long from, I think, 104 on Amazon, and it's right now at 120, down a little bit in the after-hour session. But this, to me, will be a major catalyst for tomorrow. So while normally Richard, I would agree with you and say, tomorrow will probably be a pullback based off the euphoria that we saw today. And in my opinion, you're at supply on things like the NASDAQ. I think all bets are off because of what will happen with Amazon and Apple. It's a dangerous one to be trying to front run and anticipate those earnings announcements because yesterday, obviously we had Google, right? And Google came out and their earnings actually were, they missed their expectations, but bring it up here. You can see in the after hours, it sold off right away and then just ripped up. So the ad revenue was good for them there, but the numbers weren't that great. The one that was not so good here is Microsoft as well. They sold off aggressively. That's why I call it whipsaw all the time, and then just ripped up ever since. So curious to see what happens with Amazon and Apple for tomorrow. Normally for me, if you see a huge positive update for Apple and it runs right into a supply zone, that could be a great shorting opportunity. Historically, that can produce some good ones. Actually, the only time I have traded Apple since my 2000, I think it was 2000, when I put my no trading Apple on, was actually Apple on option. So theoretically, I never traded Apple. I traded derivative of Apple, but I kind of broke my own rule there a few years back. But that's pretty much it. When Manarino, I haven't even reached out to him, Brendan. I'm that bored and busy and I just haven't taken time to I don't even have time to bring guests on the show, period. I've been doing the show pretty much solo for a while. I'll have a couple guests here in the near future, but Apple's Amazon after hours tomorrow. Correct. Well, Brendan says Apple will probably miss and then rip. I'm not even going to speculate. Who knows? Because if I say things like that, I think Apple will miss earnings and then rip up to the upside, then my brain's going to say, well, then just go long after the announcement. And to me, that's just gambling. It's like just go to the roulette wheel, put it all on red, and hope that you win. Let's see. GDP is tomorrow as well. Correct. And it's not GDP. It's advanced GDP, right? So it's not the official number. It's basically what the expectation might be. That's going to be a huge one. Right now, the expectation is we're going to come out at 0.4%. Now, remember, we had a negative 1.4 previous quarter, so I believe they're trying to manipulate things to make this number positive so we can move away from the recession talk. I don't know. We'll see how this number pans out, especially because you saw the housing numbers start to drop so quickly. That could have an impact on preliminary GDP. Now, I think it's advanced GDP. What I'd like to see is what the advanced GDP number is and then what the actual is in about a month. I think it's going to be very different. Normally they're in line, but I think that the numbers are falling or changing so quickly with regards to a lot of commodities, with regards to real estate, etc., that there's going to be a big discrepancy between the advanced or preliminary and the actual final GDP number. All right, what else did I have on here that was exciting? Of course, we had the 75 basis point increase. I think the part that everyone is interested in right now, which they should be, is now what, right? You heard Jerome Powell say something that was kind of comical. He said, what was I want to use the specific words. Damn it. substantial or extraordinarily large increases. He says the possibility is there for an extraordinarily large increase. I think that's what it was, extraordinarily large. Something along those lines, like extraordinarily large or just big. Right now, if you want to look at the forecast, here is what we had for, we have right now for the next meeting. Of course, that's going to be on September 21st. And you can see here right now as we speak, they are looking at, hold up, wait a minute. No, that does not work for me. They just dropped significantly. Holy cow. 1 second here. I want to make sure that's, why do I feel like this is completely wrong? We just jumped to 2.5. Well, that's weird. Yeah, we went from 1.75 to 2.5, so something is clearly wrong here. Either that or it kind of looks like they're expecting them to lower 25 basis points, so this might be why the optimism is there. Right now, we're between 225 and 250. We technically are right here, so something is wrong with this, which is bizarre. This is usually not incorrect, but you guys can see the expectations were yesterday that there was a, about a 50-50 chance of a 75 basis increase or a 50 basis point increase. That has plummeted today. This right here tells, I did refresh, Lisa. It feels like something's wrong with their data. I'm not quite sure what's going on here because you can see it says current target is 150, 175. That's not the case. That's the old number, right? Right. So if we look at this now, the expectation, maybe this is why we saw the markets rip, is because of those positive comments from Jerome Powell, is basically they're saying that we're not going to see a rate increase in September. We might actually see a contraction. I disagree wholeheartedly there. I do not think that they're going to stop increasing or drop rates. You guys all see it? You here with me? You can see the change from yesterday to today, massive decrease, and that's probably what shot this market up. This is going to change over the next couple of days. You will not see 200 to 225 stay at a 65% chance. That means a 65% chance of a 25 basis point cut, not increase, a cut at September meeting. I disagree. Not going to happen. Nope. Even with the economic data. So that is absolutely surprising. When I looked at this earlier, it was still showing a 40% chance of a 50 basis point increase. Wow, that is a shock. I'll be watching this one over the next couple of days for sure, just to keep track of that. But right now, apparently the futures traders have priced in a 25 basis point cut in the Fed Funds futures for September. All right, what else do we have? So obviously we had some other earnings out there, which I'll run through the names here real quick just to get it up here. Boeing just falling apart. I really just insane how badly they miss. Here's Boeing earnings at the very top there. You can see they were expected to lose 8 cents. They lost 37 cents, and that's a miss of 362%. Now, what's surprising is Boeing's chart. Even though they missed so unbelievably bad, they're still going up. They were up today, surprisingly, just a little bit, but their chart still not looking good. We got this, I don't even know when we drew this downward channel. I would argue we're still respecting that downward top trend line. So not looking good out there for Boeing. The ones that did do well today, you had Ford, right? So Ford was up 5% at the close, and now it's up another 6% post-market to $13.99. They beat earnings by 25 cents, which is nice, about a 58% increase. So not too shabby. Some of the other notable ones was Shopify. So Shopify got slaughtered on earnings, but they made an announcement that they are doing some significant layoffs, which, of course, helps the bottom line. Notice what happened today. We had that big gap down, and all of a sudden, it looks like it's ripping up to fill the gap. Now, why did this gap down? This is because of the Walmart announcement, the Walmart news. I think that was part of the reason why we saw this big gap down. Well, it almost filled that gap today, but I would contend that if we draw my famous yellow box, we are just stuck in it. There you go. There's your yellow box for Shopify. They were supposed to make 3 cents. They lost 3 cents. You're going the wrong way. What is the website URL for the earnings? There's a bunch of different ones. I'll put it in here, the one that I like to use. It's just Zacks. So here is Zacks. So you can check this one out. but there's a lot of different earnings calendars out there. You got to be careful because sometimes they don't show them all. So, for example, if I go here, let's click this off, and I will go to, watch this. If I click on earnings here, you notice it's not showing me Meta. Like, the big one should be at the very top. Meta is not even on the first page. It's way, like, why wouldn't Meta be one of the top ones that people are looking for with regards to earnings? But for some reason, it's just not on this list. So when I click here, you'll see that Meta, I'll go by market cap. Meta actually, $450 billion market cap. They better be on there. They missed earnings as well, just barely. They were supposed to make 250, came out at 246, and they were down about 2%. Now, the thing with Meta right now, which is FB, or sorry, well, that's nice. I typed in FB and it brings up Meta. The thing with Meta right now is obviously it's been beaten down significantly, but they also lowered their forecast going forward. So even though they were up 6% today, they are down 3% in the after-hour session, and they have lowered their forecast going forward for Facebook. Merlin, even with the bad news, don't we OTA grads expect price to go up right into a supply zone? Why do you say it's strange? No, it's not strange. It's just, it's so weird to hear this nice positive news and then, things rip up. And then all of a sudden it comes ripping right back down. And to me, this is an institution-fueled rally. If you have all of these futures traders speculating that all of a sudden we're going to have a rate cut in September as opposed to the anticipated 75 basis point increase, that fuels a lot of optimism. So to me, this is orchestrated. I think you could get a nice rally in the markets, but I'm going to be looking for shorting at higher levels. Let's see, what else do I got? You are missing valuable public data without scraper apps. Yeah. And while Brendan's right, we aren't getting the full picture. What I like to do, though, is I like to look at what the retail public is being fed, because to me that sounds awful, but they're the ones that are generally going to be on the opposite side of my trade. So I'm looking for what retail news is being fed. What rule is it? I don't even know. Rule number 3 on my list, right? I'll read one of my 10 laws here. Ignore the news and listen to every word of it. Oftentimes, news is already reflected in the stock's price by the time it comes out. However, understanding what is happening with the market overall is of vital importance in planning your next attack. That's just my approach to news. I like looking at the news, but I never take anything as being truthful. It's just, to me, a manipulation tool, getting you to buy or sell something or interact with markets in a specific way. Let's see, what else do I got? Okay, cool. I think I got most of the questions. Great. Let me... There was a couple tricky questions. One that I'm not that familiar with. I'll read this question, and then I'll give you the answer from my perspective. Of course, if you have questions, send in with question marks first, so I know what's coming directly to me. This question came in from Eric on YouTube last night. So again, if you want your questions answered, send them on, put them on underneath whatever video on YouTube. Just watch one of my videos, put the comment down below. That's the easiest way. He said, I have heard it from some instructors, share above equilibrium, go long, and below equilibrium, go short. Can you comment on your thoughts about how to leverage equilibrium as maybe an odds enhancer? As above, markets above and below makes economic sense of this bias. That is, assuming a confluence of other signals like supply and demand and trend supports and bias or imbalance. Okay, so first off, I guess there's some ambiguity on what people's definitions and references are when you mean when something is at equilibrium. So back to the basic economic context, equilibrium is where buyers and sellers are at even. So the seller wants to sell another one, the buyer's basically saying, well, I'm not at this price. And you get to that point where you'll get a one-for-one transaction, and there's no big move up, no big move down, you're at equilibrium. In my opinion, whatever current price is equilibrium. I know it's weird to say, but that is the price that people are willing to pay. So to me, that's equilibrium. I don't use equilibrium as a trading tool. So maybe what some of the other instructors are using it in a different context. For me, I don't do that. When I look at price traversing sideways, and we've seen a bunch of examples of that where things are just going sideways, to me that's a reflection of equilibrium, because that represents an area where price was going back and forth and buyers and sellers were happily exchanging services or goods at that range of prices. So to me, equilibrium is really the backbone of supply and demand. When something is at a demand zone or at a supply zone, you could contend that is equilibrium. So if I have a demand zone, let's just go back, I don't know, let's just pick some chart here. I'll go down to the ETFs and we'll just click on industrials. Nah, I don't like industrial. Financials. Yeah, you like any stuff. Let's see. All right. I'm trying to find a decent example. All right, so here you have an example of supply, right? You have price was going sideways. In my opinion, inside that yellow box, we were at equilibrium. We were basing, as GD says. Correct. That's how I kind of look at it, right? Oh, that's not equilibrium. So Lisa says high, low, close, divide by 3. That's not equilibrium. Those are called pivot points. That's pivot points. That's not equilibrium. That's actually a floor trader's pivots is what they call those. That's the actual term for it. And maybe that's what Eric is referencing here. But when you take a high, low, close, divide by 3, those give you what are called floor pivots that a lot of the floor traders on the CME used to use. So from my utility or use case scenario for equilibrium, it's saying in that yellow box, price was at equilibrium because it was just traversing back and forth, back and forth, back and forth, didn't break out of it. And then all of a sudden, on XLU, which is utilities, you can see here on the 8th of June, it just plummeted out of there. So while this was equilibrium, something caused that to break, right? Obviously, it was a combination of immense selling and buyers just stepping back and walking away from that, okay? So this, to me, is equilibrium. So if something is below equilibrium, it doesn't necessarily mean I need to go long or short. In this case, this equilibrium would be, let me see if I can just type it on here. I'm just going to type it right there and go supply. So how would I end up trading this? Well, if I found a decent supply zone, obviously on a move back into supply, I'm biased to selling, right? I'm looking at shorting once it reaches that area of former equilibrium, now just supply. For me, it makes it very easy from a trade setup perspective, because once I define this zone, and this is not how I would have drawn it, it's just a quick sketch of it, I would be looking at my entry, my stop loss, and my target would be based off of this zone. From this one little yellow box, I can discern all that information. Now, is it a high probability trade? Well, I'd want to run it through my odds enhancers. I would also want to look at things like the overall trend. So you look at utilities. Utilities have been trending up, and I'm actually looking at shorting it. Not the highest probability maneuver. When something's trending up, our highest probability is going to be going with the trend. In that case, buying at demand. Well, I don't have that right now. The good news and saving grace in this example is utilities have been trending up for quite some time. You can see that just recently we've made a series of lower highs, great, and lower lows. So maybe, just maybe, this is the turn, and this is now becoming a bigger downtrend. If that's the case, then I'll feel much more confident making this supply zone trade. So that's how I reference equilibrium, Eric, is I'm looking at supply and demand zones as being equilibrium. But equilibrium trend tend to be a magnet for price. I don't know. I think that the zones tend to become a magnet for price because visually people look at those areas and they say, oh, it's going to come back to here. Now, not all zones are created equal. As many of you know, if you're OTA graduates, you know, there's ways to quantify every single zone on the chart, especially when you have like a nice big uptrend in something. You always get people picking different areas in different spots. Very rarely are we going to have the exact same demand or supply zones mapped out on the same chart. And I think that's okay. I think we can look at different things. Personally, I have my methodology, which I think I'll look at a price chart and with good confidence, I think, okay, it's going to turn here. It doesn't always turn there. And your demand zone might be, to you, better than the ones I chose. And it's not a pissing contest. It's not like, hey, mine's better than yours. It's just I'm coming up with a basis for my trade. And those zones work for me, so I'll take the trade based off that. And Brendan says prices tend to mean revert. Correct. Absolutely, which is why I do like looking at things like moving averages, but in my head, I don't put them on the charts. The other part here is when you look at something like stochastics, as Brendan says, revert back to the mean. That's exactly what not stochastics, Bollinger Bands. Bollinger Bands are a mean reversion tool. You take a 20-period moving average, wrap 2 standard deviations above and below it, and there you go. If it's outside the top, it's going to come back. If it's outside the bottom, it's going to come back. Done. Simple. So, Eric, that was my 2 cents on your equilibrium one. I'm not sure the context of what the other instructors are referencing, but that's how I view that question. Next one for Judy. I think Judy might be here. This is one that is not my area of expertise. I don't do spread trading. I know what it is. It just, guys, there's so many different ways that we can trade and invest our money. This is not one of them. So what I'm going to do is I'm going to copy and paste, hopefully you're here, Judy, into chat. Brandon Wendell does a lot of this. So here is the YouTube video I did with Brandon I think like 2 years ago. And here's the question. Hey, Merlin, can you explain, oops, how about I just get off my face and show you that one? Hey, Merlin, can you explain how futures spread strategy works? I sometimes heard instructors mention it, but don't know how the concept works. We'll appreciate it if you can explain. In the video I did with Brandon, he explains it fairly thoroughly. Essentially what you're doing is you're looking at two separate contracts and you're exploiting the difference between the two. Because for one contract, it might be overvalued, one might be undervalued, and you're basically kind of doing a reversion and capture the difference between those two contracts. In a very quick nutshell, that's spread trading. The mechanics of it can be rather complicated, and Brandon does a good job in that video that I just posted into chat. If you want, you can just go to my YouTube channel and just type in, once you go to the YouTube channel, I'll show you. Bear with me as I bring up my page. So you go to TraderMerlin, of course, the greatest YouTube channel out there, right? So here you go. If you went to the TraderMerlin YouTube channel, you would just click on that, and there's a little search icon right here. Just type in spread. And there's a few that we've done, but the first one that pops up is how spread trading works with Brandon Wendell. We also had bond credit spreads, which is a good one. You have, this is the one for today, spread differential with Sean Reed. That was awesome. And then there's another one with Brandon, which was done 6 months ago, futures spreads with Brandon Wendell. So there you go. There's quite a few different videos we've done on spreads, but a lot of good information out there. And that, my friends, will do it for the questions. I only had 2 questions that came in the last 48 hours, or 24 hours. And what else do I got? I watched one of the Wendell about futures. I think you saw that one, Brandon. You know, it's an interesting thing, and here's the reason I was very interested in it. I have, let's just say, I keep the names out of it, but I have friends that are on the back end at trading firms, and what that means is there's information that you can learn about what strategy works. How are people successful? How are people losing money? When I got started, I was blessed to be on an open trading floor, and I knew the people in the back office. So let's say, you know, Kevin over here, and there was a Kevin. Let's say Kevin just, you see him start screaming, he picks up his chair, he throws it, starts throwing all kinds of curse words, and he just storms out of the building. And everyone's just like wide-eyed, like, oh, don't mess with Kevin, something's wrong. I would go back in the back office and I would just go analyze his trades and see what he did. And it got to the point where I was like, oh man, I know exactly what he did. What an idiot. Why would you do that? And I started to learn a lot about it. And the reason I'm saying this is when you are in the back office, man, you are a data miner. You can find out so much about your customers. And one individual that I know well told me, he goes, out of all the people that trade at our futures trading firm, he goes, the most consistent traders out there are spread traders. And I was like, I got to learn how to do spread trading, right? And I just never pursued it, never did it. But I don't know. From the stats that they were telling me, as long as you are consistent with your strategy and you follow a set of rules, you never have the huge winners as a spread trader, but you have very consistent ones. You know, it's kind of like my 1% selling options. We can always take on more risk to have bigger gainers. I would rather take on a lot less risk and be much more consistent. That to me is my perfect one. I'm finding my options group of spreads. Awesome, Brendan. Good. MJ, want to know about weed, huh? Let's go check out MJ for NJ. I mean, what's to say here, brother? Look at that price chart. I mean, I remember back in 2020, we were actually optimistic because we broke out. I believe it was back in November of 2020. We were saying, hey, it finally broke this downtrend and looks good and rallied up to 34. Well, this trend has been just nothing but down. You know, looks pretty damn ugly. I don't see it looking any better. You know, what'll happen here is a lot of people will go, it can't go much lower. It's $5.78. It's not going to go to zero. No, it probably won't because it's a diversified fund, right? It has a whole bunch of different marijuana or cannabis-related companies in it. But what can happen is they can do a reverse split. So as this thing drifts down, it'll all of a sudden, let's say you have 100 shares, and you're long from $10, and it drops down to $3. Like, God, I'm losing all this money. It can't go to zero. What will happen is they will do a reverse split. You'll get a 10-to-1 reverse split. And so instead of having 100 shares, you now have 10 shares, but you have 10 shares at $10, just the reverse. I think what did I do? Oh, MU. Sorry, NJ. Oh, you guys are funny. No, I thought you put MJ in there. So yeah, well, MJ looks like trash. I really don't see, stay out of the cannabis industry until it turns around. It's just, this has just been a sinking ship for months and months and months and months and months. Okay, now MU, the one that apparently I need to get glasses for this show. Thank you, Daniel, for putting that in there, because I would not have caught that. But as far as Micron goes, chip makers are under a lot of pressure right now. You look at what's gone on with Micron since 2020, it's been pretty ugly, right? Lower lows, lower highs. So I would contend we're in a downtrend on that scale. Ultimately, I would probably have to ask the question, NJ, is what's your goal? What's your time frame? Because look at the long picture here. If we go back to 2009 when we bottomed out, this thing's still looking awesome. This looks better than the overall market, in my opinion. It looks phenomenal for Micron. So, we've got this little bounce point here. I actually think the bounce point would have been lower. If I was going to draw from the origin of this, it would have been actually here. But, splitting hairs, and it's always after the fact. It's tough because you've got a monster double top on a weekly. You guys can see that right at the top. Of course, we know it in hindsight because it bounced twice and then broke the lows. So at this point, I would have to say that Micron will most likely continue back to the upside based off the longer-term trend that is still intact. Now, if you start to see it break down below, let's say 50, well, then I think you really have to reevaluate because it's already making a new low. As of, what month was this? As of May of this year, it already is making lower lows. That's pretty important from my analysis of a trend changing. And everything works until it doesn't. So this has been looking great up to this point right here. Amazing. It still looks great, but as soon as you broke this low right here, that tells me that something has fundamentally changed with Micron. It doesn't mean we're dead. It just means that the buyers are no longer confident enough to keep pushing this thing up. So I think you're at an inflection point here as well. 52.50 is that low point that we saw just for a couple of weeks ago, back to July 5th or so. I don't know. I don't think I would personally make a trade on this one. I don't think I would buy Micron. It's just not in an area where I go, this is the spot. Maybe if we break above, let's call it 63.75, there are some unfilled gaps. All right, especially up here around 73, then maybe I'll go long there. But I feel like it's had a pretty big bounce, and I could draw a trend line across the top here and, connect where I see most points. I don't know, still drifted down. Doesn't look great for me right now. That's just me personally. Reverse, but learn that the hard way. A lot of people do, Michael. A lot of people do. All right, that's going to do it. I like to look for resistance becomes support. Yep, breakthrough. What was resistance now becomes support. What was support now becomes resistance. Pretty simple. Now, let's go look at what we have cooking for tomorrow. I'll start things off with the economic calendar. Now, the big news is before market opens tomorrow. You can see advanced GDP. That is pretty much it. What does Jim Cramer say about Micron? That is brilliant. So I don't know if you guys caught it, but there's a meme that's not even a meme. Somebody is posting, and rightfully so, Jim Cramer, when Coinbase came out. I'll bring up the chart here for us. Thanks for throwing a curveball and making the show go an hour. Damn you. So here's Coinbase, right? So when they came out and did their IPO in 2021 and around April, in this first month or so, Jim Cramer, what was he saying? 490 is our target, or we like 490 or something like that. We love coin at 490. And then yesterday, Jim Cramer post, oh, it's about time that the SEC is investigating Coinbase. I've been waiting ages for this to happen. You contradicting, lying, inverse piece of doo-doo. Now that it's all of a sudden down here and got shredded, now he's like, oh, well, I didn't like it at 490, but yeah, good thing the SEC came. I've been waiting for that. What an absolute clown. You want humor? Just watch Jim Cramer stuff. You want stock picks? Stay away from that guy or just do the exact opposite of it. All right, anyway, you got me on a rant there. Here is your economic stuff for tomorrow. So you obviously have some news for Japan as well, and for anybody who's been trading that market, you have seen some pretty decent moves with the USD JPY. I'll bring that chart up for you in just a second. It's been hesitating, but in my opinion, it's sitting at demand zone right now. For the Japanese markets, you got CPI numbers, unemployment, summary of opinions from the Bank of Japan, retail sales. So a busy day. They have consumer confidence and housing starts, all kinds of announcements for Japan. And here's the chart of the Japanese dollar, or USD JPY. You can see dollar still on a pretty big uptrend. Right now you're basing right around 136 even. If that level gets broken, then you might want to bail on the US dollar Japanese yen. Otherwise, I think this trend is going to keep on going, which means the yen getting weaker and weaker and weaker. That said, a lot of this economic data could impact that trajectory. Now, GDP, the big one at the top. Remember, negative 1.6 was our previous reading. They're expecting the advanced number to be 0.4%. We shall see about that. What else do we have on here? We got some PPI numbers for Australia, GDP for France, etc. But that's the most important stuff. Now, here is the popcorn trade of the day. That's right. There's going to be 2 of them tomorrow. You've got the A-listers, Apple and Amazon. That is roughly $3.7 trillion worth of market cap. That's right, $3.7 trillion worth of market cap reporting earnings tomorrow. Apple, which has got a market cap of $2.4 trillion, they report after market close. Same with Amazon after market close, but they're only $1.2 trillion market cap, half of what Apple is. You also have some very notables in here, since we talked about MJ in the weed space. You've got Tilray Brands, T-L-R-Y. Brendan, aren't you glad that you got out of that Tilray? Brendan, I think, remember the first time you were watching this show, it was back here, and as this thing vaulted up, and it was ripping to the upside, and you were long Tilray, and I was like, locking profits, dude, locking profits, and I think you did. Probably loving it now that Tilray's down about $3.32. I'm hoping you got out of that one, or you like to hold. You might still be in Tilray after all this time. You also have MasterCard, Roku, Intel. You got drug makers Pfizer, Merck, and then the biggest drug company of them all, Altria. I'm kidding. It's tobacco, but they're a drug company. I think we'd all agree with that. That is what is happening with regards to earnings for tomorrow. Should be a fun one. I don't really know what to expect with this equity market tomorrow. You can make an argument for it going ripping to the upside. You can make an argument for it retracing and having an over-enthusiastic run today and crashing tomorrow. Just be careful out there. Make sure you have a plan in place. On uncertain days like that, my recommendation is always trade smaller, right? If you're generally going to trade, let's say 3 contracts, well, then trade 2 or 1. If you're going to trade 500 shares of a stock, maybe trade 250 or 300 or 200, but cut it back just a little bit because that volatility could be so crazy, especially with Apple, Amazon, Feds, rate announcement, interest rates, etc. Could be a wild one. That said, everybody, have a fantastic remainder of your day. If you have comments or things you want me to talk about on tomorrow's show, you can put them down below the YouTube video. Just go to any YouTube video and say, here's what I want you to cover, or I like this, I didn't like this, you picked on Brendan too much, or you can email me at TraderMerlin@gmail.com. That said, have a fantastic day, everybody. I will see you all tomorrow. Take care.